and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Wednesday. Let me grab the screen here and let's get going. Just had a couple trades closing up on SPX. Winner, chicken dinner. Little SPX trade for a quiet morning. Grabbed a couple bucks out of this chop, which was nice. I put on a little bonus trade. If anybody's interested, I'll throw this in the alert section. This is a little short-term trade. Let me go into my Discord for A1 Trading under stocks and options. This is going to be the SPY 9/27 expiration, 574 long call. Let me see what it's trading for right now. I got filled on it for $1.09, and right now the SPY out to Friday is trading for $1.11. So long call 111 to 115 debit. Profit target is if SPY hits 574 to 575, check for credit, or based on the current delta, looking for a 215 to 225 credit to protect. Okay, and then I'll take a screenshot here. This is what I'm watching for. So put in my little arrow. SPY 574 long call for $1.10 debit. Okay, so I'm going to throw that trade in, and all I'm looking for is if price will just make its way up anytime between today and Friday. That's all we're looking for. So if price just kind of melts up here towards 574, 575, I'll check for my 110 debit to be trading for maybe $2 credit, $2 and some change credit, and I'm going to take some profit on that trade. So that's what I'm looking for. That's the trade, and that's my screenshot. Throw that in there. And that's going to be posted in the A1 Discord under my trade signals. There it is. All right. So keep an eye on it. So we got that going for us. I took a look this morning to see, how's silver doing, how's gold doing, how's China stocks doing. China stocks were looking to open up a little bit lower. So that was a big, crazy day yesterday. I had a ton of P&L, hit some fresh watermark highs for everyone's account. That was great. And I want to take a look at all that stuff today. So we're just doing this little melt up. I also have with the 562 center on my SPY, I'm looking to see if we can actually crack this Thursday high. Is there a melt up here towards 575? Is there a melt up towards, maybe, I don't know, who knows? The expected move, let me go to like this week, for example. If we go SPY for the rest of the week, I mean, I'm seeing a 575 is within the cards for maybe another $3.74 some way directionally. So if we get to 575, that should be enough to turn a 960 debit into maybe like an $11 or $12 credit, and that's fine. I'm looking for like a 15 to 25% take profit. So I have vol plays on SPY and Qs, which also is looking to be breaking out above Thursday's high. Oh, look at you, Nasdaq. So Qs are going up. Let me see where my Qs are at. So this is another couple of bucks from yesterday. So 485 and I got to check this one. So let's go QQQ. Check on some positions here. And if we drift a little bit higher today, I do have some trades on ES that I'll take a look at as well. Qs, somewhere in this mess of signals. Oxy's dropping a little bit, but I do have that protective put just in case. QQQ, individual accounts. Here we go. October 4th. 1, 2, 3, 4. This trade cost me 11.50 and it is currently up 13.05. Ooh, okay. Can we melt up a little bit more? Should I take the profit? $1.50 a contract's not bad. I am playing this out to I'm looking at the cues. It's like we're sitting here with today's price action above Thursday's high. This melt up, I mean, this would be my supply zone up here. This would also be a nice gap to fill. But if I've got the profit and the time, let me see if I can get out of here for 13 bucks. I'm going to try to go after $13 and just take the profit. So pending at $13, I'm going to go ahead and put issue order closes here. So go into my October 4th and close, looking for a $13 credit. Pending. All right, we'll try to get these closed up at 13 bucks. That'd be $1.50 a contract. 3, 4, close. And if we gap higher, or we just find it smoothly today, that's fine. So I'm going to try to get these closed for 13 bucks. So 1, 2, 3, 4, close. $13. One, two, three, four. Going into your broker platform, it does feel like you have to have a little bit of obsessive compulsive disorder to make sure you check everything and double and triple check everything. Has anybody seen the movie Slammin' Salmon? If not, it's worth checking out. Same guys that brought you Super Troopers. They've had some hits, they've had some misses, but Salmon nobody talks about, but it's actually one of my favorite ones. Anyway, one guy was on medication and he was doing desserts and he had to like count them and he ended up putting his thumb in them. And anyway, it was a restaurant business. So I'm going to put a close order at 13 bucks and see if that'll get filled today or tomorrow or whenever. But it's a nice little profit that I'll manage. So that's Q's. And then if I look at my SPY position, I just don't think the SPY has moved enough. So if I take a look at my SPY, SPY is right here. 1, 2, 3, 4. Looking to close. It's about break even. I got in for a 962. It's traded at 930, so it just hasn't moved. I need to see another couple of bucks of movement for me to want to take the SPY off the table. And then Nvidia was the other one. Nvidia was up like almost 4% yesterday. And I do have a play that's vol as well. I'm trying to see if it goes back up to 130. And this is 1, 2, 3, 4 for all the legs. There's the close, 826, and I paid 840. So it's break even. All right. So I'm not closing Nvidia. I'm not closing the SPY. I'm trying to close the Qs because we're up at least through Thursday's high, giving me about $1.50 a contract. So if I do the math on that, if I take $1.50 over $11.50, that's a 13% take profit. I wish it was 15% or 25%. It's not there yet. I could obviously sit on the sidelines and wait and see if the price wants to go up higher. But I'm just going to go ahead and look to issue the profit take on the Qs and be done with it. I have one more trade on the SPX for this morning that should be looking pretty good. A 255 trading for 230. I've got a debit in at 215 for profit. That's about 40 bucks a contract. So that one I'll just continue to watch. If I get a nice little bells and whistles going off here, then that one's going to be filling hopefully in the next maybe 15, 20 minutes while we're in session. All right. So that's a quick update there. Yeah, so Zell is asking, yeah, I mean there's a link. If the team wants to post a link, I've got a Pulver alert section for all these sessions I do with A1 Trading. If I find a live trade, I'll take it here, or their Discord channel. I'm posting a lot of alerts. So if you're in the A1 Trading Discord and you have access to my Pulver alerts, it's right under here with Chris's trades. I do a journal every single day. Index trades on SPX, NDX, SPYQs, IWM, DIA, commodity trades. Just oil was the only one I focused on so far. Anything I like in Forex, stocks and options, futures, all that stuff. So that's kind of my full-on trade service right now. If you want that, that's through the A1 Trading link. I have a link in my Discord for that, or the team can post that as well if you're interested. So All righty. Let's take a look at everything. So I said China had a big day yesterday, as it did. Today looks a little bit crappier. Now, it did gap way higher. I mean, we gapped way up here, then faded. So it's still technically up 0.68%, but this type of price action doesn't look super assuring or reassuring to have like a fall of like 2.5% from a gap higher. Like literally price, I mean, from that close yesterday, this is wild. So close yesterday, this thing gaps up here 3% and then gives back pretty much two and a half of it. Okay. So, I mean, does this mean anything? I don't know. Not really, but it is a little disruptive in the price action. So, if we're seeing like maybe something like this where we have this trend line break, and technically you can't really ask for a better setup. So, we have a break, we retest, we go. If we retest this level, don't be surprised to see China come back in maybe one more time before we get the official go. Now, I'd love to see a bull flag. And I mentioned this yesterday in my live session. I do a live session at 3 p.m. every day called the final hour. And I mentioned the best thing I could look for would be if we see a bull flag. That'd be a great sign for the buyers to be very, very interested in pushing this thing higher. But if it does pull back instead, then it'd be some type of wave structure, something like this. Pull back into wave structure and then still looking to see if we stay bid. But that trend line break looks pretty good. Holding support, future support. I'd still be watching that. Okay. So that's HSI. That's the Hang Seng Index. If I go to some of the stocks that I like, so Alibaba is at 95. I do have shares of Alibaba. I think I have some ownership. Let me double check here. So Alibaba positions right in here. So I have some shares. I have a lot of options here. The 65 naked puts, some ratio spreads, the 60 by 40. These are actually it's 70 by 65 and 65 by 40. So a lot of like income generating credit spreads. And then I do just have some shares that I'm willing to dollar cost average into. When I bought the shares, I think I bought it around, I guess current price. No, that's working at 61. Where did I buy it? Oh, I bought it at 85. So I'm up like $10 a share right now. So my position's overall up about $10,800, and hopefully there's plenty more where that came from. BIDU is still a little bit upside down, but I got assigned early on BIDU. My cost basis is around break even now. My personal account's like 89 on break even. My managed accounts are in the low 90s, about 92 and change. So I need well, I'm in the shares. I'm keeping them. I'm covered at 115 and 130, and then I got a bunch of credit spreads. The 80 by 50, the 80s. I've got naked puts. I got ratio spreads. So I'm still exposed. FXI took some fresh trades yesterday. I have some shares. They are currently covered up to $29, and we're trading at 29.77. So I'm probably going to forfeit some of the profit if we have an upside, but I also did a credit spread like the 31 by 30 or 30 by 29 or 30 and 30.5 by 30. I did a bunch of credit spreads yesterday to kind of add some exposure. I'm willing to take more assignment on some of the FXI trades. And I think that's about it. Maybe K-Web as well. K-Web, let me check my break even on K-Web because I know I bought these calls for not a lot of not a lot of money. It didn't cost a lot, but let me check here. So if I go K-Web $23 call, so a $23 call, let me check this account. So let's go history. Let's go this account here. Let's go K-Web. And I'll go year to date. So I bought a call for $8.20, which puts my break even to around 31. Now I've sold a bunch of options against that. I should have a tracker for K-Web. I bought the call. I sold against it. My break even is 796. Maybe what I can do now is actually issue additional trades against it. So let's go to K-Web. K-Web's at 29.30. We hit highs yesterday at $30. Again, structurally looks pretty good for, I mean, I see this as if we're coming back to a double bottom, okay, fine. But with this type of break right here and having a higher low off the backside of this trend line, to me, I'm looking at symmetry. So low to high swing, low to high swing. I'm looking for K-Web to get back in here towards about $44 or so. And I want to say my expiration is January of this year. So I still have like Q4. If we get another rally or additional continuation on China, this trade's going to be okay. But what I'm going to look for is if I can sell against it. So I've got a $23 call that puts my break even. Let's see here, $23 plus a break even of 7.96. So my break even's 31 bucks. So if I'm going to sell this, I need to sell and make sure that I'm keeping, my break even in mind, so I'm not just selling too aggressively. So let me see here. If I go to trade, I need 2 contracts to cover. If I go out, let's say 37 to 50 days, maybe pre-election, post-election might be great, but pre-election I could do for $31. That's my break even. I still get 70 cents. For 30, let me go out a little bit further then. Let's see, $33. So I can get 33 cents at a $33. Let me do the break even there. So if I have 23 plus 7.96 puts me at a break even of 31.96. If I get it called away at 33, I'd make $400 by November 1st. That's fine. I'm okay with that. I think I'll do that. 33 cents. I don't really have a bid here for the 34, which is interesting, but I do get 16 cents on the 35. Let's see. If I go out one more week, that would incorporate the election, which is going to be drama, obviously. But I get more premium. It's going out another couple of weeks. This is 51 days out. Let me delete this. So if I did for the 34, I'll do this one. I'm gonna do the $35 covered call. This is a 14 delta. I'll see if we can push up into that. So if I'll do 30 cents here, 2 contracts for 30 cents, filled at 30 cents. All right, so now I get to add to my break even. So this is adding a 11:15 expiration sell call, 30 cents credit, which will bring my break even down to 7.66. And that this take profit got filled on SPX 3 for 3. Thank you very much, Miss Lippy. $35 sell call. All right, so that would be, let me crunch the numbers there. So if I have $23 call plus the 766 break even, get it called away at $35, 434. So this would be 4.34 per contract, or per share rather. Actually, no, it's 434 per contract. And some I have ones and twos. So if I have 2 contracts here, that'd be $868. I'm a little bit happier with that. Okay, so I'm going to go ahead and follow through with that on others. 3 for 3 on my daily profit play. So let me do a quick edit here. Filled for profit. And another little bullseye. Booyah. And what else do I have on KWeb? So let's go KWeb. Need to do some maintenance here. KWeb, 2 call. There we go. Same thing. So let's do on this account the 35 for 30 cents, 2 contracts. Filled. KWeb. This account, 35 for 2 contracts for 30 cents. Okay, and rinse and repeat. This account. So I can take this one and just copy and paste. All right, so I need to trade 35, 2 contracts, this account, and just a few more here, and I'll be done. 23 on this account, 2 contracts. There we go. This one is covered. Almost there. 2 contracts. Okay, and should be good here for 30 cents. 31 cents. Ooh, a penny for your thoughts. And lastly here, 30 cents, 8051. Go to 2 contracts. And okay, all the accounts are in. Break even is 766. If it gets called away, it's $4.34 a contract. Should be about $868 in profit if we continue to rally higher. So I do this intentionally where it's out of the money. So I want price to appreciate. I want to see if this will actually test the $35 strike price. If it gets called away, I'm okay getting the stock called away for profit. If it doesn't get called away, then I've just lowered my cost basis by 30 cents, and I'll do it again, and I'll do it again, and try to do this at least 1 or 2 more times by the end of the year. And hopefully, we continue to see a little bit of a push higher on China stocks. All right. So, what else are we going to talk about today? Never a dull moment in the old financial markets. So let me add in my notes here. So I have a $23 long call, $35 sell call, and then it's 30.66 break even. So I can add that there. And I'm going to set a chart alarm at 35 to see if price actually goes above my 35. Oh, come on now. You mean I used up all 400 of my alerts? Jeez, oh Pete's. All right. Anything I can get rid of here? Alerts, inactives. Will this give me one more alert? 35. Survey says nope. All right. I need to get rid of some of those alerts. Anyway, fine. There's the trade. That's KWeb. So that's a bit of my China summary. Alibaba, Baidu, KWeb, FXI. That's the exposure that I have, and that's what I'm riding with right now. And we're looking to see if China is going to continue to get the market excited for some added global liquidity. Let me check the money supply, and let's go to U.S. money supply. It is back on the liftoff here. Let's go to money supply and see what other countries we have. China. How's this for money supply? It's been going higher. What other money supply do we have? Let's go Japan money supply. It's faded a little bit since April, but looks like as of August we've dipped. I'm curious if this starts to come higher. This is just I'm just kind of assessing for like global liquidity. So we have like M1s, M2s, M3s for China. There's obviously a lot there. I'm looking to see there's got to be like a better way to see like global money supply. Is there a way to track global money supply? Macro, micro. The M2 from the Fed website's always good. There we go. That might be just US money supply though. Okay, anything here? World major central bank M2 money supply. It's getting up there. All right, I'm going to keep this. I'm going to call this global money supply M2 and come back and track it. Money supply of major central banks, growth of the Fed, ECB, People's Bank of China, Bank of Japan, market cap divided by M2. Those might be good charts to check out. All right, I'll keep this page. Just want to see if we're heading higher. Global liquidity. Look, this is where melt up is pretty solid, right? If M2 is going up, it just feeds more liquidity into the markets. I'll go to my the bottom of my list here, where I talked about what are the most important indicators we probably need to keep an eye on here for the U.S. Junk bonds, which are the widening of credit spreads or the tightening of credit spreads. This doesn't mean your typical options trade. This means like literally treasuries like AAA, triple B, triple C. If this is heading higher, credit situation is good. Okay, if this is heading lower, like we did back here in 2022, like we did back in 2020, like we did back here in 2018 when we sold off at the end of the year, then we did back this in 2015, 16 when we had like a 20% correction, you know, it obviously shows a little bit of liquidity crunch. So right now we're actually going higher, making higher highs and higher lows. No signs of something bad. And again, I wish I could say this is a leading indicator, but this is going to be a reflection of price action. So if the stock market starts to drop and dump, this might turn south and probably will, but it's going to be kind of correlated at the same time as opposed to one leads the other. But as far as the stock market sustaining that type of bear move or pullback or whatever it is, this might show us that hey, things are looking a little bit loose out there in the old credit spreads. And if they widen, that means there's less liquidity for investing and everything for the circulation of money. So that is something to watch. And then our big data that we should be paying attention to here in the US is I think that the US market, right, the indexes are going to be highly sensitive to the employment news that's coming in the next couple of weeks. So we have jobless claims and we have continuing jobless claims. Now, they're not the same thing, but they're both going to matter to see where are the trends. Now, you can see here from historical standpoints, they're sitting at these crazy lows. Like historically, we are still in a very fine labor market. I'm not saying it's super tight anymore because that's different. We've got the inverted yield curve now, or the disinverted yield curve. But from a reference of where we've been historically, we've certainly seen jobless claims higher and initial jobless claims higher, continuing jobless claims higher. We've seen worse employment situations than now. Um, but that's one thing we need to watch. The Fed did take that big bite out of the rate cuts in order to kind of help the economy. Now they can't prevent unemployment from going higher. They can't prevent the economy from turning over and rolling over on itself because we've had a pretty good run since that 2022 recovery, right? We had a bear market 2022, late 2022 into Q4. From Q4 2022 to now, it has been pretty much nonstop and almost nonsense. Yes, we've had some dips along the way, but I mean, this year it was like an April and an August dip, and the market's back up to all-time highs. So it shrugged off a lot of things, and I still feel there's a lot of potential risk to the downside. I'm still hedging just to be safe, but trying not to make it cost an arm and a leg. And but anyway, these are some things I'm watching. But S&P sitting here near the highs. Let's do dollar, gold, silver. Let's talk about some currencies as well. I looked at my Swiss franc pairs this morning. I'm now up about $9,000 on the Swiss crosses. So hopefully we'll continue to go that way. Hopefully more to come. And we also had the Swiss National Bank looking at rate decisions tomorrow. And if they cut, and it says that they're supposed to, if they cut from this level to this level, right? Swiss franc is weaker today. All my currency pairs except for the yen, which I'm still participating in a very small position on the Swiss yen short. But New Zealand, Aussie, pound, CAD, dollar, euro, I'm all bullish against the Swiss. And there's still a lot of profits to be had. Hopefully, I will have them. And I just want to see where they're at. So if I go to these positions on the Aussie Swiss, I'm looking to take this Aussie Swiss from that flash crash low all the way back up to symmetry. There's a low, there's a high, there's a higher low. Let's go higher high. So let me measure this because I'd like to take it all the way back up to this 6,100 zone, but I will be a bit more conservative on some symmetry. So right there for a low to high swing, and then right there for a lower or a higher low to higher high. So 60.50 to 6,100. Happy with profit on the Aussie Swiss. I'll keep that one there for reference. CAD Swiss, we had a flash crash there. I look at it kind of the same way. Take the low, take the high, and project some symmetry. And this should be able to get back up. There's also a big pocket right up here. And this is conservative. Like CAD Swiss, I'd like to see the CAD Swiss get up to like 7,000. But even symmetry here is at 65, which is fine. But I'm going to try to take it back up to, I don't know. Frank, you muddling around there in the background?
Yeah. Hey, Chris. How's it going?
Hey, what's up, dude? How are you?
Not much. Kind of a slow day in the market, so
Slow day's a
haven't
good day,
found
dude.
a good setup.
Yeah, I had
Yeah.
three winners on SPX this morning, so I'd say it's a good start. I'm not complaining.
It's good.
Let
Already?
me, yeah, I took them all like around opening bell. They were just little SPX trades.
Is it a
Uh,
strangle?
Pretty much. Yep. So CAD Swiss,
Gotcha.
if we have a 3-wave symmetry, it's right here. I'm actually looking for a 5th wave to get us back into this high around 67. 67 to 68 would be a pretty good take profit. Longer term, it's all the way up here. We probably need to see oil stay resilient. We need to see a much weaker wave of weakness on the Swiss franc. So I don't know how aggressive I'm going to be on the CAD Swiss, but if we get to 67 or 68, I'll assess my profit. I also could see this one. If we come back up here for some like larger pattern, then maybe I trade it again, get back to this high, and then project the symmetry like so. So I think phase one is going to be, let's see if we can get up towards symmetry here or these highs. That'd be 1, 2, 3, 4, 5. We get there, take some profit. And then if we get a pullback, reload, and look at the bigger symmetry there. So again, this has been a year and a half in the making. So don't think like, where's he coming with this stuff? I have been tracking, almost stalking, almost obsessing over the Swiss pairs for a while, and I'm just trading them. But it's hopefully going to be like patterns in the making. Hopefully, this is one of those positions where, one of my favorite things to do in the Forex market is invest, where I like to trade. I'm getting paid to hold the trade. This is what's nice about positive swap right now. And it's also not the Japanese yen. Like everyone was doing the carry trade and killing it on the yen crosses with carry. I had very little to do with that. I hate the yen, and I still will hate the yen forever. But dollar Swiss, so CAD Swiss is fine. Euro Swiss looking better, right? Looking better. I'd like to see the Euro Swiss back up towards parity at that would be 1.00. Pound Swiss, I'm trying to hold long back up to 117, but my profit target's 120. And then New Zealand Swiss, this one's looking much better. Let me plot some symmetry here, but I'd like to get back to the highs at 56. There's a round number at 6,000 as well. I'm going to plot the symmetry, Frank, and then you and I can tag team some trades. By the way, Micron has earnings today if you want to revisit that with me. I don't know if we looked at that on Monday or not. Did we? Did we look at Micron together?
No, we didn't.
Okay. So if I get symmetry on the New Zealand Swiss, that's around 55, 55, 50. And there's obviously some momentum right up there. There's a nice little pocket, lots of structure right around that 5,600 handle. So yeah, we'll see. But symmetry is going to be my first target on a lot of these pairs. And then dollar Swiss, final one. It's hanging in there. We essentially have like a flash crash double bottom. If the Swiss gets weaker, I'd love to see this happen, where the dollar just, because of the Swiss franc getting weaker, maybe the dollar survives, even though the DXY is still a mess. In fact, let's go to the DXY. It's still a mess. And be freaking careful on these fake outs, man. I think this is bear trap written all over it. So I'm not taking the bait. I'm trying to outsmart the trap that's set there. So I'm pulling like a Bugs Bunny, and I'm not selling anything. So, and I said this yesterday. If I want to see a bearish dollar, the best way that I can make money like that is just holding assets long. So if I'm long the stock market, long gold, long silver, long Bitcoin, long anything, if the dollar gets weaker, all these look good. If the dollar gets stronger, well, I deal with whatever chop we might get here and pullbacks we might get, but I'm not necessarily jumping into Forex pairs in the dollar right now. So I think this market is trying to do something. I'm just not sure if it's going to give us all the weakness that we want, or if this thing's going to like rip back and be, something post-election. I really don't know. And I'm not going to sit here and, lose sleep over what's the dollar going to do and what am I going to do with my dollar pairs in Forex. Nothing. If the dollar gets weaker, everything goes up. That's an easier trade for me. So those are my thoughts there. Frank, what do you got for me today? Look at Micron. What else are you going to look at?
I'm trying to look at what could be the top for the S&P today.
Okay.
But it's very choppy. You go on the daily chart, it does look like a reversal here, but it's very early in the day. A lot of these small sell-offs come all the way back up. I was looking at 750 today, 740 to 750 as the top, but I didn't take any trades on the upside, so I'm still kind of in some sort of limbo, I guess, today, but I may end up not taking anything. On top of that, let's see, gold is coming down, which I like to see. Hopefully we get a retracement. I'd like to see probably 100-point retracement if that's possible. But I want to get into that.
Mm-hmm.
And Bitcoin up against some harsh resistance.
Yeah.
It's had a good run. It's like up 20% from the lows this month, but we're at the 200-day moving average. We're on some falling trend line. So yeah, we're just gonna have to see if this respects it. Could come down here to 6,500, and then if it breaks, we could look at a test towards 70K. But overall, I'm hoping that it goes up in the next couple months.
What trend line is that? What auto trend line is that, Frank? Is that a smooth or simple moving average?
It's a simple moving average.
Okay, because I've got an EMA on mine that's price is actually above the EMA. So a little bit more. EMAs are a little bit more aggressive to price than SMAs, but yeah, I was just curious.
Is it bouncing off it, or like how far below
cut through
price?
It cut through it. So it's prices like when it came down to 50 grand, that was like below the 200, then back above it, then back below it, then back above it. So it's just kind of building a bit of a chop fest right now. I mean, the upside is Bitcoin's got to break above 70 to look like the bulls are back in control. Otherwise, I would say this is just a long awaited accumulation zone. And I kind of hope that I mean, for an accumulation perspective, I hope we come back to like 52 or 50,000 again so I can re-up. But if we don't, I did add some IBIT exposure. It'll be interesting to see the timeline on the BlackRock ETF. If it's IBIT that gets approved for options, it still has to be approved by the OCC and the CFTC. And if and when that goes live, I do have some core positions on IBIT that I would like to be actively trading options. So I do have, I think everyone has some exposure on IBIT somewhere in here. So I've got between, my lowest account has a 71 shares, 100 shares, 300 shares, 400 shares, 200 shares. So I'm up $3,000, but this is one other leg of my portfolio that really hasn't done anything. So I know like Bitcoin is up for the year, and I didn't take any profit either. I was long since like the breakout at 30K. That was late last year, and I still haven't taken any profit on Bitcoin. So I also have just been sitting and waiting, like, are we going to 100 grand? And I hope we are, because that is worth the investment. And I've got some, clients involved in that as well.
This is why I think Bitcoin and gold are the trades, is as long as we see this chart come higher, that means we're looking at a faster rate of falling 2-year yields. And in the short term, I think that's going to be good for, things that are basically currencies trading against the dollar. So gold, obviously, we've seen that take off. I think Bitcoin, though, is more of a catch-up trade. So I'm kind of looking into like maybe getting more exposure on Bitcoin before this year's over.
Okay.
Maybe in the next week or so, but I'm kind of bullish Bitcoin. It's gotten beat up so bad, and then it took a while for it to recover. And seeing that it's back up to these levels at like, is it 60 something, 63?
Yep.
I'm kind of thinking that price is going to keep going up as long as yields keep dropping, the dollar gets weaker.
Yeah, I'm looking to. I might have to change this pane. So it's interesting you say the 2-year dropping. The 2-year, 10-year. So now the disinversion is 25 basis points. So we're certainly like disinverting hard. I did take a screenshot of this yesterday. Okay, so the moment that we disinvert, let's go back and have a history lesson on how long did it take for a recession, because it's not instantly. And so we just
I looked at it this morning.
You looked at this morning?
No, I looked at when the yield curve inverted.
Well, inverted,
or when it disinverted.
Yeah.
It was in June, I think.
So
and then
we
June
did
of 2007, and then January of 2008 was the first month where things started looking grim.
Yeah. So this is exactly what can you see my screen?
Yeah.
Okay. So this is like Okay, so we disinverted and it began 10 months later. So that's pretty much what you were saying, like June, July, says January. So it says 10 months. So whenever that disinversion was, it was 10 months for the recession to begin. December 2000, recession began 4 months later. So this is April 2001. Disinverted June of 1989. Recession began 13 months later. October 1981 began 2 months later. 1980, 3 months later. So it's not a perfect formula of like, oh, it's going to happen right away. Now, these in, I mean, 1980, 1981, that was pretty much immediate. 1989, 13 months later, 2000, 4 months later, 2007, the great financial crisis, which is arguably outside of the Great Depression, one of the worst times ever, 10 months later. So are we able to kind of kick the can down the road and see like, 6 months of leeway, 10 months of leeway? I don't know. So nobody knows. And maybe it's different this time, but something tells me it's probably not. It's just a matter of how overvalued do things get before reality sets in. And I keep going back to this, like it's going to be price is going to lead the way. But and we've talked about this a lot on these sessions. Like I was very nervous to see the longest inverted yield curve in history finally getting disinverted. Like there has to be some type of historical. It's going to rhyme. Like yes, there's going to be a recession, but is it X amount of months later? We don't know. And the reality is, if we compare this to the S&P, and the S&P for the next 3, 4, 5, 6 months pushes higher and then has a Q2, Q3, Q4 collapse, well, that might be what triggers the recession. But it might be 6 months later, 8 months later, 10 months later. And then all it becomes is another data point on this chart right here that says, August 2024, recession began, blah, blah, blah later. It's just going to be another piece to this. So I think it's something to note. Like there's no crystal ball of like how quickly it has to begin, but I do think that going from the all-time longest inverted yield curve, I hope it's not the all-time longest recession, because eventually something's gonna hit. But we also have central banks and fiscal policy that have gotten a lot, I wouldn't say smarter, but they've gotten more efficient in terms of they use it a lot more. And so like the first reaction by the market is, when's the Fed going to cut rates? When the Fed's going to ease? When we're going to get the Fed put? When's the backstop? And the government right now is spending money like crazy. So it's not a good thing. It's just those tools that have been in play for the last 15 years are staying in play, and they are pretty darn powerful. So anyway, price is ultimately our leading indicator. It's going to be something that this is why I'm uncomfortable with like just staying crazy, blinders on, bullish, and to the moon. Like I just
Well,
don't
look,
think we
look,
go nuts
look at 2008 again.
on that like
I put it on my
inverted yield curve.
screen, which was yeah. So the
Okay.
yield curve in '07. So when it disinverted,
Yep.
this was March of '07.
Okay.
Was it? Yeah. Okay. So it was January of '08. We were at what is this? 1.5%. So the gap was significant, I would say, before we saw any like major disruption in the market. Whereas now, I mean, it's climbing steadily, but
Yeah.
we're still not.
You,
We're not really at a very concerning point yet. And even going back to 2007, it inverted again for a little bit. So we're not super sure of this trend. I feel like this has got to start running much higher. Like we got to be above 1. And at this rate, at the start of this month, it was at 0. So who knows? Maybe in a couple months we could be there.
I think that one interesting factoid from like these last couple of years, it's not so much about the number of the disinverted. Like if we go like right now, we're disinverted by 0.25, right? That's the 10 minus the 2. It's a 0.25%. I think it's the rate of change that actually starts to trigger the scary stuff. Because right here, it's like if you look at '06, we had inverted back in December of '05, inverted in January of 06. We disinverted, but that didn't cause, I mean, there's no recession in 06. No great financial crisis in 06. And then we reinvert, or I should say we invert again, June of 06, disinvert, reinvert. I keep saying that backwards, but it's inverted several times. So we go invert, dis, in, dis, in, dis, in, dis. It just goes back and forth. And then finally, I think it's this that I think is like the sharpest increase. And that's when things get really bad. Like this is by June of 07, into, let's say, August of 07. How are we looking on the stock market in those periods? That's my question. So let me write that down. So we got June and August of 07. So June to August 07. Let's see when this market actually started to crumble. And this may mean absolutely nothing, but if there's anything to take away from it, I think the rate of change might be more important than the actual inverted versus disinversion, right? It's like if we aggressively move higher in that 10 and 2, that could be where all the trouble lies. So let me go back to that June and August of 07 and just find something here. So June, here it is. So June to August of 07, we are talking through some of the tops in the market. So this was the top in June, and then we go to October, and that was a double top that this market didn't look back. So let me go back to that tool. I'm just making a personal note here because this might mean something. You never know. And let's go back to that 08 period. And I'm gonna look at the percentage of change with that disinversion getting more aggressive. So right here, we have a rip. That move right there in a short amount of time goes up about 500%. It's a 0.22%. So I'm just going to make a note here. 0.22 or about 530%. And then we have another one that is from August to August. And that one rips up around 0.35% and 170. So I think it's probably more of the number itself, like 0.22, 0.35, because the percentages are measuring kind of awkwardly. But those are big leaps, man. Like you look at how this thing jumps and then jumps again, and by the time we officially hit that double top, you're talking September, October. Things get a little nasty. So I'd say anything with a 1 month move, June to June, August to
Can you do
August.
something for me?
Yeah, for sure.
Can you go down to the bottom right of that chart and click on the settings?
Yeah, this guy.
Yeah, and then go up to where does it say? Go to invert scale.
Okay.
Now this is really confusing. Well, how do you know what's inverted and what's not now?
Well, now you just inverted the inverted yield curve.
Yeah, so now I just confuse things.
Well, why would you do that? Just go back to regular.
I don't know.
He's trying to mess with me.
I felt like we were hyper analyzing this, so I was doing something. I was taking it a step further.
All right. Well, here's what I'm saying. Are we jumping quickly enough to see, like right here, it's up about 0.19. I mean, and again, maybe, and I'm not like, I don't think I'm hyper analyzing. I'm trying to grab onto something where it's like, does it make any sense? Like the Great Financial Crisis, if there's anything that's going to resemble that, I 100% want to be ready for it. And again, the best way to do that is to have protection, regardless of what the hell the market's going to do. Because if we don't know when the next big crash is going to happen or how it's going to happen and what the outlier black swan is, nobody knows that. So protection at all times is fine. But if we're really going to try to maybe profit from it, it'd be nice to kind of grab some past correlation. So I don't know, man. I could be totally wrong, but getting to this disinverted stage and going up around 0.25% or 0.26 points in the last month, I mean, that's not nothing. But surprisingly, the market's like, we're off and running. But maybe the big difference is our rates. Like our overall rates were way different in 2007, 2008 than they are now. So anyway, all right, I'll stop talking about it. This is not really getting me anywhere, but I'm just making a mental note. So pull up my Norm Macdonald walkie-talkie and say note to self. So
Well, what fundamentally broke? I know the housing market did, but what was the catalyst in 2008? Like, why did all of a sudden we get a really bad month in that September? Even though the whole year was down pretty much. We started January down
it was
and
probably this.
continued.
I
So
think what was so mortgage delinquencies and like the bond market, like everything started to show lots and lots of stress. And when you had rising defaults and delinquencies, it was probably all these things showing like these banks that are liable for hundreds and hundreds of billions of dollars of loans that would be defaulting. It was like the domino effect. So I mean the mortgage crisis had a lot to do with it because banks were just lending and on the hook and servicing for what people clearly couldn't afford. But that's the difference in the strictness now of like getting a house. I mean, I like on paper, I should have no problems getting a house, but going through an approval process between like personally and business wise, like it's not easy. It's way more stringent and kind of annoying than I wanted to be. But I'm gonna check this out. Oh, this only goes back to 1953. There you go. um, so fudge, man. This, I guess we stopped tracking
why?
mortgage delinquencies in 1963. So Frank, it's no longer important.
Okay,
All right.
that's weird.
It's not important when they don't happen, right? Let's see here. All commercial banks delinquency rates, consumer loans. So I'm just typing in delinquency, right? And if I type in delinquency and get all these data points, so commercial real estate, single family residential mortgages, credit card loans. I mean, honestly, I'm not saying this is fun to talk about, but off session today, I'm probably going to go through each one of these and look to see are they on the rise? And if so, do they track back to 07, 08? Were they tracking back? I mean, maybe this means something. If we're about to have like another great financial crisis situation, all these things were getting beat up. Like nobody could afford the homes they were in. People that were having like back in 06 and 07, people were buying, I can't remember what it's called, but it's a type of mortgage where basically all you pay for is like you pay for like negative amortization. And what this is so let's say your 15-year loan is like $4,000 a month. Your 30-year fixed mortgage is like $3,000 a month, and your negative amortization loan is like $1,200 a month. A lot of people had 3, 4, 5 homes that they were looking to renovate or flip or just keep in their real estate portfolio, but they are only paying the negative amortization, and all that means is like your principal is never getting lower and you're basically rolling debt over all the time, but the prices that people can maintain. But when the rate started to go up or there's less liquidity available, and all of a sudden these loans are coming due, it went from like a $1,200 payment as an example to like $5,000 a house or
Yeah,
$8,000 a house. And all of a sudden, instantly, people couldn't afford them. And it was foreclosure, foreclosure, foreclosure. And that was like what started to break. So it was a matter of like rising delinquencies and people couldn't make, and there's lateness. And I'm sure there's like periods of it, right? Like 30 days late, 60 days late, and then it goes into potential delinquency, then it goes into foreclosure. So all these things take months to happen. But that was like 2007, 2008. That was like what broke because the banks were on the hook for all these loans that just could not be serviced. And of course, it's government bailout. But I mean, my gosh, man, we're talking about a government bailout of $700 billion, which right now seems like chump change, considering we're adding at like $1 trillion to our deficit every 30 to 35 days. So 700 billion. I mean, how much do we give to Ukraine? That and then some. So anyway,
yeah,
um, and right now it's like subprime is big in auto. I mean, that's probably the next like potential threat is auto's like way less than mortgage, but the subprime auto is the same type of situation. People are buying cars at higher interest rates. They can't afford to take the payments, so they're stalling. And anyway, so I'll do some digging in that to see if there's any rhyme or reason or any correlations. But those are all the things under the surface that could be like bubbling along, and maybe that ends up poking its head out and causing a lot of problems. But we'll find out.
okay.
So we'll find out. Dude,
Yeah.
time flies. Let's talk trades. I did currencies, I did gold, I did silver. Bitcoin we looked at.
We can price out Micron. We didn't
Yeah, I
do
was gonna
that
say
yet.
Micron. There's hardly any earnings this week, so Micron's like the only game in town. I just want to look at it. So we're trading at 96. We've already made a move for the week on Micron. Not that we can't have another move, but it's pretty bullish overall for the week since last Thursday. The Qs are up to fresh highs since last Thursday. Did you see that? Looking at the Qs, we're sitting here up at the same highs from
I
Thursday
actually
with a
did
little bit of a
not see
close
that.
above. Yep. So this index is starting to maybe outpace a little bit. So the Dow is down, the SPY is flat, the Russell is down, and we're still trading within this range that I drew
So
last
tech is
Thursday.
the only thing that's up.
Tech is the only thing that's up. So another kind of
Wow, I've
divergence
been really
in the
just
markets.
focusing on FP.
Yeah. So I just thought it was interesting. So Micron earnings today
Okay, so
after market.
Nvidia's back up to 124.
Yep.
You know how they were talking about demand for chips was insane. They said
Yep.
that like a week or so ago. And then I guess with China rebounding with their stimulus, that could be true. Also, okay, wait, this is unrelated, but I just remembered. Speaking of China,
Okay.
and oil demand, did you see that oil inventories came in really low? They
So
came
that
in
shows
at
demand is higher than.
minus. I mean, that's what
Way
I would
low.
be thinking. It
Yeah.
was minus 4.5 million,
That's way off.
and the
Yeah.
expectation was 1.3.
Yep. Interesting.
But we got oil falling, right? Oil's down.
I mean, for the day, yes, but oil's also. I mean, oil's had a pretty good bounce off the lows. I mean, to the peak yesterday, oil was up 10.79% from the looks like what's that low? That's the September 10th low to yesterday's high. That's up 11% roughly. I mean, oil's not making a big move. I think that the whole global demand picture it matters a lot for oil. Um, Oil is very well supported on the technicals, right around $66 to $65. But if it breaks and global demand somehow becomes like the same situation, like this was slowing global demand, and if all of a sudden we break below these levels and it's slowing global demand, that's not a good thing. I would actually be pretty skeptical that the markets make all-time highs if global oil demand is slowing, because it's probably a lot of US, it's a
Yeah.
lot of China, and then OPEC, OPEC doesn't want to see prices dropping. So there might be cuts in production, there might be like they always play around with if global demand is slowing, they just stop producing and they try to keep prices relatively stable and elevated, but you never know. You never know. So I think global demand, if it picks up, that could be a good sign for oil to stabilize and get back into the 80s. You just wonder how much that's going to affect U.S. inflation numbers. But as we saw last week with Fed's talk or Powell's talk, I think the U.S. is way more focused on labor data than it is inflation data right now. Agree or disagree? I think labor is way
Yeah.
more important right now than inflation.
I think, yeah, I don't think, since inflation fell so hard, I guess if oil came back up, it could do something to inflation, but I don't know. I think they're more concerned about saving jobs now than anything.
Sure.
Because that's the thing that's most in danger to crack. And so
Agreed.
if that falls apart, then
that's the reality of the
we are
recession.
in more trouble.
Yeah, if we have like the labor market is cracking and getting worse and softening like crazy, then that's when the recession talk really becomes the reality. It's like, look, we are a nation that is 70% GDP consumer, right? We have to buy stuff for our GDP to be strong. If people aren't working, people aren't buying. So if our job numbers get worse, continuing claims, initial claims, obviously we miss on non-farm. None of these things are good for the consumption side of things. So for a stronger economy, we don't make stuff anymore. We buy stuff, right? So for our economy to still be humming along, we want to see happy consumers. Now, the one saving grace is maybe we stop buying little things. But if people are still looking to make moves in the housing market, because right now, if you can have a home and you can have that as an asset, you can have that and build the equity, you have something that is available. Again, if you sell it and you have, all this excess like liquidity, or you have all this equity in the home, that's where most people's balance sheet, as like a US home buyer, the balance sheets have preserved this like bull run, in my opinion, because prices have gone up in homes from the median home at like, I don't know, man, 150 to $200,000 within the last like 5 years to now like three to $400,000 median home price. It's like more than doubled, which is why we're at these all-time unaffordable housing levels. But a rate cut like this and another 25 to 50 basis points by the end of the year, another whatever 20, it's either 50 or 75 by the end of the year. Once we get through that and it hopefully reflects in the mortgage rates, then there's going to be a little bit more moving and shaking where people are willing to relook and there's more supply coming online. And I'm sure it depends on the market, but I'm in a market where housing, it's like there isn't enough space for housing right now because the biggest builders in the world, like in the US with Pulte and Lennar and is it DH Horton? DR Horton? Who's a DR Horton? What the heck? Hang on. It's one of the builders. DR Horton, yeah. So Lennar is LEN, Pulte is PHM, DR Horton DHI, and then Toll Brothers is TOL. All those home builders are literally in the same neighborhood, building out phases and buying up land and competing to just get more homes built. So, and I know that this is my market, not your market, but if there's a housing demand in these markets in the US, those big old home builders are going to be there like ready to flood the market with supply. I don't know if that's going to be a problem at some point when it's like if rates don't come down enough, you're going to flood the market with supply and people can maybe still not afford homes. So, and what does matter is, are they still working? Because you can build all homes you want, but if people are losing their jobs, you're not buying a house, unfortunately. So again,
Demand is
all
still there.
stuff. Demand is totally there, but it's also there from like the biggest pockets in the world. Like if you can't buy a home right now, who else is going to come in and buy a home? Wealthy people. Okay. Investors, BlackRock, you know? So anyway, the demand is there. The supply is playing catch up. But we've had a crazy unaffordable housing market for a while now. And, the rate cuts are important. It's just, is it enough? And how
Do you
quickly can
think
it
the
can actually?
majority of these home sales are from hedge funds like BlackRock?
No. It's a small sliver. Like it's still less than it's less than 10%. It's probably way less than that. Um, it's mostly still like citizen owned, but I mean, there's still real estate firms and there's individuals that just have crazy amounts of debt and they just manage it to have more properties. There's Airbnb, right? There's Airbnb people out there that are just going to buy and flip and whatever they can do to have long-term rentals or short-term rentals. It's a whole thing, man. Like real estate is always a great asset. Land is a great asset and it's still tried and true. But my point is, if people lose their jobs, they're not buying houses. So whether you cut rates or not, who gives a crap? So like these things matter. I think that the whole point of this conversation is, as you said, labor market is the most important thing right now. If people are losing their jobs or our employment numbers are turning to be softer and terrible, then that's probably the biggest sign of this market rolling over where it's like, okay, now the consumer is not only strapped because they've been spending more than they can make and they're carrying these high levels of debt, but now you're getting job numbers are getting softer, unemployment's rising and continuing to rise, and all of a sudden I don't know, I just think there's a lot of things that kind of halt this melt up. And so I just want to be ready for it. I'm not saying I'm positioning for it where it's like this is the direction I'm trading. I'm just saying I want to be ready for that type of rollover if we get it. Otherwise, market ignores a lot of things. Election years, the market usually averages about 20 to 22% a year to the upside in the S&P. We're probably going to have some volatility pre-election, but I don't think we have a lot of election drama unless we have a full Democratic sweep or we have a full Republican sweep. Because the only thing the market's going to hate more than bad job numbers right now would be policy change. Gridlock for the U.S. is frustrating because nothing gets done, but the markets love it because there's no major sweeping policy changes.
I don't think it's going to be a sweep either way.
I don't think it will be either. But I'm saying, like, if that were to happen, that's where the market would be more uncertain, because it's like, what does that mean? Granted, if we have a Democratic sweep, then people are going to be worried about, increasing in taxes and tax the wealthy. It's still going to be the middle class that pays for it somehow. You're talking, I mean, the dumbest thing of like taxing unrealized gains. Are you effing serious? Like, I don't think any of these things get passed, but just the notion of throwing those out there as a plan and a policy, it's scary. So sweeping left or
Well,
sweeping right
that
is
I
scary on either side.
I saw that too. I was really confused about that because I don't even know how you would track that. It was
Should
a
never pass.
suggestion,
Yeah,
but it's for um, people worth over 100
100
million
million.
or something.
I know.
So if we, I don't know, I guess someone like me was trading, and I was up whatever amount, I wouldn't get taxed because I'm not worth 100 million.
Yeah, I
Something
get it.
like that.
It's just the notion that we would do that, because all of a sudden, all I'm going to have going to the back of my head is like Atlas Shrugged, where it's like the people that have the most money are like going to find ways to find their loopholes, and they'll find ways to put their money elsewhere, and they don't want to be in the U.S. And all of a sudden, it's like going to dry
I
up.
think they would just stop. Yeah, they would just stop kind of being active then in the
Right.
market.
It's like, yeah, I'll take it, pay it once, and pay it never again. I mean, it again. I don't think it ever gets passed, because that is a terribly stupid policy. Um, anyway, we'll talk about something else. All right, dude. Couple more minutes. You
Let's
want to
do
give me 9
Micron.
minutes and let's talk Micron? All right.
Yeah.
Option Slam. Let's go to Option Slam. Micron. Here we go. So we have earnings after market today. We have an average move of around 10.39 according to the last like 50 earnings. I'm reading here 6.5, 6.79, 6.8, 5.4, 6, 6, 6.5, 7, 9. 10 is the average, but I'm not seeing a lot of convincing here, other than the last earnings report, which was June. That was a 9.72% move. The other ones, I'd say safely, we're kind of looking more of like the 6 to 6.5% move. So if I'm going to do
Yeah.
something on Micron, Micron's trading at what price right now? Micron is trading
So
at 90 something,
95 and a
95.
half
Okay.
times
So
0.06.
95.50. So we've got
So a
about a
5 point move.
Yep. So I've got about $5.7,
Gotta be
5.73, and I'll go 6.5% as well. 0.065 times 95.52 to about a 620 move. So we'll say five. We'll say 550 to 650. I think that's fair. That's an expected move based on what I'm seeing. It's pretty conservative, but I also think that if I position my option in a way to get that move, I can get the move. If we have a 7, 8, 9% move, that makes our life a lot easier. Let me see if I can price something out of Micron and see if it's any good. So it is interesting that Micron is not priced out or moving the same way as other semiconductors. If you look at Nvidia is getting a rip. I also saw that Nvidia was rallying because their CEO stopped selling, which I think is ridiculous. It's like that's why the stock's going up, is because the CEO is no longer cashing in on crazy amounts of profit. Whatever, but it looks different than SMH and SOXX. Are you trading anything with like multi-leveraged semiconductor stuff?
no.
No, okay. I looked at actually on FinViz. When you look at the heat map, there was like a double and triple leveraged play. I was like, oh, I wonder if Frank's trading that. All right, so 550 to 650. If I look at price this out, I probably would look at an expiration for, if we go Friday. Okay. So a couple ways to trade this. Do you want to be a buyer or a seller, Frank? What do you think?
I don't really know. I mean,
Okay.
they have high expectations this quarter,
Mm-hmm.
and I don't know. They would have to. Okay, price is far off the highs, so I think a good report would be good for the stock. So maybe it would be
Yeah.
volatile to the upside. Um, but I don't know. I've been burned too many times on betting on volatility.
Yeah. So here's Okay, so here's a way to play it that's not terribly expensive. Now, what I don't love is I conservatively calculated a 550 to 650 move, right? That's what I calculated. Now, if I take this trade where I buy a 96 call and I buy a 95 put, and I give myself $10 of direction, that means I can max my profit out at $10. Okay. Now, if I pay $6.55 for it, I'm risking 650 to make 350, which isn't exactly the most favorable reward to risk. Okay. The implied volatility here is $8.51 by Friday. Now, I do want to see something. If I go out farther in time, how much more expensive does this get? Because this isn't a bad play, but this is way lower from what I calculated. I don't want to pay 650 for this. I'm paying a lot more for that implied volatility, which I don't want to pay for it. But I don't think that if I did the opposite here, if I were to switch this to a sell and a sell and a buy and a buy, and I try to contain the price, now I can collect $6.50. And if price blows through my upside here, I'm still risking $340. But but then I have to wait all the way to expiration, which by Friday is not bad. It's only 2 days of trading. You see what I'm saying? It's like a seller almost to me seems like the more attractive piece, because if we don't see a lot of volatility out of Micron and it just is like, a little like lackluster move, then it's easy to collect that premium and walk away with profit. The only issue is if somehow the market's like, hey, there's no other earnings, let's play something, and the market's like, yay or yay, whatever, and we see this big move. So I don't know. I don't know if I'm going to trade it. I like the idea of selling the premium, but if we have a blowout move, I'm at least risk defined. So it's not like we lose a ton, and I could also tighten this up. I can risk less. Actually, I'm risking a little bit more. Hang on a second. Let me see. So collect the premium. Nope, more risk. That's probably it. So about 10. The expected move is 850. So if I went to $8, I think 10's fair, dude. So if I'm right, and I'm not like, it's not like I'm taking 650 unless price, obviously by the end of Friday, if price by Friday is inside of this, okay, inside of this, then you can collect the entire 650, which is a pretty good trade. The flip side of that is if I buy this and buy this and I sell this and I sell this, now I pay 650 and I need price to move $10. Now, if it moves $10, I can make the $3.50 or $3.40 a contract, which gives me a little bit of profit. So I don't know, man. It's kind of a shit show. It's kind of a crapshoot because I'd like to say I can contain the volatility, and I'm only giving it a couple of days, right? That's one thing I'd say. I'd rather sell it if I'm giving it a couple of days, but it just gives me very little time to manage it. So I guess how much could we get here? So Micron, a gap fill would be about $4. I mean, let's look at $10. If we went down to 85, that's going to be new lows on Micron. If we go to 105, that is coming back into the August highs. I mean, a trade's a trade, dude. It's not that big of a deal. Frank, I'm going to take a stab at selling and buying and buying. Now, let me see if I can construct this where I go at the money. So if I go $95, now I get $7 and I'm only risking 400. That's interesting that I'm risking less if I go out a strike. 396. So that's about the optimum if I'm going out $10 or so. So 346 is my max loss. I'm going to take the trade, dude. So I'm going to try to get 655 in this trade and see what happens. So let's go.
So this is containing price. You're selling the volatility.
Yep. So instead of doing like an iron condor where I sell up here and I sell down here, I'm actually selling at the price, and I'm looking to see that price just won't go beyond the expected move. That's what I'm looking for. So, and because I'm going to do expiration out to the 27th, there's not a lot of extra time to, we can get an earnings reaction, but if we like instantly like react and then fade, that might be good to like see my price come back to where I need it. So I'm going to take the trade for 655. See what I can get here. So 655. See if I can get filled for 6.55 credit. Oh, come on now. Bid ask is not super wide. 654. Come on, you turds. 653 got filled. Okay. Time to get some action here. 653 not filling. Gosh darn it. 2 filled. Okay. Okay, I'm getting filled at 652 for everybody, which is good. That's not bad. Okay. Come on, 652.
So tech looks like it's the only thing up today.
Yeah,
Looking at
tech
the
is the only
heat
thing
map.
up today. All right, so trade is in. Let me see. Can I take a, is this screenshot, is this like confusing if I put this in my, I'm just going to take a picture of this.
Of that?
Yeah. I don't know if that's
You
going to help
have a,
anybody or confuse anybody. So let me just
you
do it
have
on the
a
chart.
chart,
Yeah, I'll
like
do a
a
chart.
visualized
Yeah,
chart.
yeah. I'll do a chart. 6.50 to 6.55 credit. All right. So this trade is a 9.27 expiration. Selling the 96, selling the 95. So selling 96 call, buying 106 call. Sell 95 put, buy 85 put, 650 to 655 credit. I want price to stay between, let's say, I actually want price to stay to be greater than 85 and less than 106 for profit. Look to manage 25 to 50% take profit, or hold for full if price hovers around 95. Because if it stays at 95 and we only have till Friday expiration, then it's a pretty easy trade. So I'm going to box this in, and let's go from 105 or 106 to the upside. 106 down to 85 right in here. And we just need to see price essentially stay within this. So I'll put a little arrow here, have some fun with the drawing tool. I want to see price stay below and stay above. All right. Does that make sense?
Yeah.
All right. So that's the trade. That's the screenshot. That'll make a little bit more sense. I'll post that in the Discord for my service. Okay. So it's priced in, dude. I'm in. Micron. Let's see what happens. So this is a stock options trade. MU 9/27 expiration.
Oh, yeah, we have Costco as well.
They have earnings. Is that Thursday?
It's Thursday, yeah.
Okay, so sell 96 call, buy 106 call, sell 95 put, buy 85 put, 6.50 credit or higher. So this is 650 max profit, and then 350 max loss. This is a MU earnings play, looking to see if price will move less than $10 either direction and allow us to keep the credit and benefit from a lackluster movement. Now, I don't know. Obviously, if Micron has like it's up freaking $30, then well, crap, I'm going to lose $3.50. But I'm going to go after a profit target. But the expiration is near term enough that I'm like, if we just have a lackluster move on Thursday when the market opens, if there's not a huge gap one way or the other, then that's kind of perfect to just kind of hang on to it and maybe see like immediate profit. If I can turn 650 credit into like a 450 debit or 350 debit, I'll probably just take the profit and move on and just take the couple $100. So I'll look at that trade. All right, so let me throw my screenshot in this one. So copy and paste, and right here. All right, and that is posted in the stock options trade of my section in Discord. There it is. Cool. All right, that's Micron. Costco. So
this will have to be the last one.
Yeah, this is the last one. So I did I do this one? I did do this one. This is pending. I don't know if this is going to get filled. I think you and I talked about this on Monday.
I'm thinking that this one's not. I feel like this one will either not move too far to the upside or it will go down pretty hard. I don't see it going up to.
Yeah. So I have a pending. I have the pending order. It's a 965 by 970 bear call spread. I think we priced this one out on Monday. I mean, if it jumps to the upside, that's fine, but I would look to fade that just because. And I mean, I'm just guessing, but if I get filled for 250 credit, then I'm looking to see it fade and just stay below my strike at 965. What is likely going to happen is it's limited, or it goes lower, or even it moves a little bit. I don't get filled. This trade doesn't even matter. Like it doesn't get filled, and that's fine. But if it does get filled, hopefully it's a gap up and then fade, and we just get it to stay below our 965 as a line in the sand, and we make money. So yeah. I'll keep an eye on this one. It's pending. It still has to get filled. And this would be after earnings because it's not happening now at 905. But anyway, I still want to like own Costco on dips. I think I have some ratio spreads. Let me double check on Costco. So I know I have a bunch of trades. Costco. Yep. So I have a bunch of like ratio spreads or credit spreads, 700 by 655, 655 by 600s. I've got some ratio spreads there. It's a 111. Let me check one account. So I have a buy at 700, sell at 655, and sell at 600. So yeah, I'm creating like a big profit trap, and I'd be willing to own shares with my margin accounts. I'd be willing to own shares at $600 a share. So it obviously tie up capital, but if I am in the trade, I've got a $5.43 credit by January. If price just does nothing and stays elevated, I make $540 a contract. So I'm pretty certain that Costco is not going to dump to $600 by January. That's a pretty big drop. So I actually like that trade a lot. And that's in my alert service as well. I feel like that trade. So, all right, dude, I've stretched you at least 8 minutes past your comfort zone. So I guess I'll let you go.
Yeah. Too long, man.
Too long. You can handle it, bro. Yeah. All right, cool, man. Any final words? Any parting words?
I would just say to be careful because we are just in a spot in the market where things are just, I don't know, very uncomfortable. You can see price keeps going up, but for how long and how far? So I don't know. My last words are I'm going to keep looking to kind of cap the upside, or at least call the cap. So I'm going to be selling credit spreads. But today has not really showed me much of a move, so
yep,
I'm not really involved in it right now. But that's all I have to say.
All right. From the mouth of Forrest Gump. That's all I have to say about that. All right, man. Any final questions, anybody? All good? I think we're good, yeah? That was a fun session. That flew by, dude. Hour and change flew by, as always.
Yeah, we covered a lot of ground.
All right, cool. And we also deep dove into probably unnecessary things with yields and rates, but I'm going to look into those delinquencies. I'm curious to see like what that position looked like just going into the great financial crisis. But look, it's whatever is about to happen is it's not going to be immediate. Disinversion is not immediate. Here's the last 5 times it's happened where we had recessions: 2 months, 3 months, 13, 4, and 10, all different. Nobody knows. So this is why, to Frank's point, looking to kind of play some tops. I'm adding hedges to make sure that I've got some profits to roll in. If I get a drawdown, I want to like offset those with hedges. But you never know. And I certainly think that risk is it comes quicker. Like when we have these like super low melt up environments, like risk comes quicker. Just like we saw back in July and August. It's like I don't think we have another vol event like August, but you never freaking know. So I'd rather be prepared for that than not. So, all right, that's it. Happy Wednesday. Have a good rest of the day, everybody.
Yep.
See you, Frank.
Good.
Bye.
See you.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.